Good afternoon. This is Sam McGrasty with Brady Ware Dealership Advisors, and I want to welcome everyone to this month's webinar. This month, we're going to take a brief look at some state and local tax updates and how that affects dealerships. There's been a lot of developments in that area, and we are excited to have our own Nick Lepley from our dealership team to talk about some of the issues that we're seeing in the state and local tax arena that are affecting dealerships. This month, we're going to do more of a moderation, a question and discussion versus just a presentation. So it'll be a little more interactive this month. So with that, I look forward to getting started with Nick.
Good afternoon, everybody. Again, my name is Nick Lepley. I've been working here with Sam for the last 10 years, and excited to talk to you today about a little state and local tax issues that are becoming more and more prevalent in today's ever-evolving business environment. So without further ado, I'm gonna click here over the first slide. Today, I'd like to start off by talking.
Yeah, let's talk about this. There's been a recent case in the sales tax arena. Last year, it was a major case, the Wayfair versus South Dakota. And let's start there. That has a major impact on almost a lot of businesses doing the internet and especially dealerships. So Nick, what are you seeing? How do you think about that? How it relates to that case?
Okay, well, I guess let me start with a little background of how this case became such a hot topic in today's world. So going back in history, you got to learn about the initial court case. It was Quill Corp, North Dakota. This was actually back in 1992. The case resulted from Quill Corp. It was a software company trying to sell basically software to businesses in North Dakota. Directly over the internet, and North Dakota wanted their cut, so they went after them, and they took it all the way up to the Supreme Court, and the Supreme Court in 1992 ruled that that it was basically unconstitutional at the time to collect that sales tax. So that's a little history about where we now lead to today, 26 years later, when the U.S. Supreme Court took South Dakota versus Wayfair, and everybody.
These are software internet kind of companies. They don't have physical presence in South Dakota.
Yeah,
right?
it is, and a lot of you might be very familiar with Wayfair. They're an online retailer of home goods and other assortment of materials. But in this court case today, there was a 5-4 decision that essentially overturned the 1992 court case. Now, what was the major change is that now the online retailers no longer needed to have a physical presence in the state with which they were selling these goods through the e-commerce route. So what they ruled is that rather than it being a physical presence, they basically determined that there is an economic and or a virtual contact with the state can be established, simply can establish the nexus in the state. And kind of give you an example of what an economic and a virtual contact is. An economic contact would be some value of specified dollar of a sale within that state, or a virtual contact would be a number of transactions with that state, and that would establish a nexus in which you would need to collect sales tax on those sales.
So how are you seeing this affect dealerships, Nick? And dealerships are usually they sell various things across state lines and some through the internet. How are you seeing this affect dealerships? What areas?
Well, the biggest area that we see with dealers is a lot of times you guys will be out selling either parts, possibly service contracts, maybe even some consulting services over the internet to out of state, wherever you guys are domiciled. And as a result of these sales, you have to kind of take a quick look. In the case of South Dakota, we're talking about 100,000 in sales is what the economic threshold that they have is, or 200 transactions. So if you if you have part sales, whether it's to an end user or to a potential dealer, you have to be aware that those sales can actually drive you into the threshold with which you need to be collecting sales taxes on those on the sales into whichever state that you're in.
So there are thresholds, and they vary by state. When you have a reportable transaction?
Yes.
correct?
Yeah, absolutely. Yeah. Currently, it's a pretty wide range, actually. Some states, and these are all still kind of moving targets at this point to a degree as well. There's been some that are as low as 10,000, and then some of the larger states like California and Texas, they're actually going with a much higher threshold of 500,000. The one thing about these thresholds that actually can be really confusing, and it can also kind of get you caught up in, is that, what they are actually defining as, what is included in these sales to meet these thresholds can be any number of things, and each state's definition is a little bit different. And then that go another step further is when you're selling parts into another state. Depending on if you're selling to a reseller, you might be exempt from that having to collect sales tax anyway. But if you're selling to an end user, you might need to collect sales tax. What makes it confusing is that some states, for example, Washington, they explicitly count both taxable and non-taxable sales in getting to that 100,000 threshold, whereas Rhode Island counts just the taxable sales towards the threshold of reaching that 100,000. So you might only have 10,000 of actual taxable sales into a state with another 90,000 that are exempt. However, now you've hit that 100,000 threshold, and you need to be collecting sales tax on that 10,000 despite not, having all taxable sales there. So again, it gets really convoluted, and every state has a slightly different spin on that. So I can't assert enough that you really take a look
So
at.
you're selling, if you're a dealership, you're selling parts online, service contracts online. You really got to be aware of where you're shipping these parts into and selling.
Yes,
Vehicles doesn't matter as much because you're going to do the title flip when you sell the vehicle.
Exactly. And that definitely leads to some issues in regards to, knowing who that end user is as well.
Right.
You really need to make sure if you're selling a bunch of parts to say another dealership or a body shop, something like that, who's going to turn around and resell those, versus, hey, you got a guy who's trying to trick out his Corvette and he's trying to put a new engine in, and you guys happen to have the right part for him, that you might need to subject to sales tax.
This is something you've seen some notices this year regarding this from dealers have been sending in from other states.
Yeah, we actually have had a client, it was earlier this year, they received a tax notice from Oklahoma recently, and basically it wasn't something that said, hey, you owe sales tax on these amount of sales, but it was reaching out saying, hey, we kind of know that you're selling internet sales into our state. Here's all the legal jargon and definition of what basically would make you a retail or online remote seller, if you will. And then they list out the threshold of their state and everything else that applies there. But when you get down to the bottom, and this is what I want to really point your attention to, is this on the last page of the thing. It's talking about the penalty for failure to comply with these new Nexus laws of not being physically present there, but having the online sales. This was Oklahoma. The commission shall issue a penalty in the amount of 20,000 or 20% of total sales in Oklahoma during the previous 12 months, whichever is less. So if you sold $100,000 worth of parts or whatever into Oklahoma that are subject to sales tax, and you haven't been collecting that, you're going to be hit with, first off, you're going to be hit with a $20,000 penalty right off the start. Plus, you're probably going to be liable for the sales tax that you should have been collecting to begin with. And then, let's say you don't start catching this until 2020. Now you've got multiple years. You've got, on top of that, you've got the interest that they're going to be charging you as well. So
the takeaway is, if you're selling this stuff online into other states, you really need to keep an eye out for these questionnaires / notices. I know we've seen some other states send questionnaires thinking we think you're selling into our state. So this stuff gets often shuffled on the bottom, in the business office. You really got to take notice when these things over and get them to your tax advisor or research them. And another takeaway would be that if you're selling into states, it'd be good that you almost have to start keeping an eye on how much you're selling into that state to know if you hit these individual thresholds. Yep. So they've really opened a landmine for online sales.
Yeah, and alluding to kind of Sam wrapping those up, these are just a handful of questions. If you take a peek at the slide real quick, you really want to be, what is the makeup of the sales of our dealership? Okay, well, we obviously have our car sales. Now you really need to be carving out with your accounting department or maybe your online sales rep. Hey, where are all these going? And that's kind of leads you to that next question. Do we have out-of-state online sales, and who is the purchaser, as we talked about earlier? Is it an end user or is it a resale? And then another little trinket in there in a lot of these laws is that if it is an exempt purchaser, or it's somebody who's going to resell your part, are you collecting the proper exemption certificates? And these aren't very difficult to fill out. It's essentially you're collecting data on who's buying your goods and basically saying, hey, this is us protecting ourselves. This is an exempt sale. This is who bought it. So that way, if XYZ Ford in Kentucky gets pulled for a sales tax auditor and they see that you in Ohio sold them a bunch of parts and you didn't collect sales tax on it, you've got the exemption certificate basically saying, hey, this isn't a taxable sale. We're clean here. So that's another little piece that you should be asking if you're compliant with that area as well. And then also you need to be asking yourself, are these sales going on year over year? These laws are on a rolling basis. So 1 year you may be below the threshold, the next you might be over. And if you're always kind of teetering on that threshold number, it might be smart, even if you're a little bit under the threshold, to be collecting sales taxes. Once you get triggered over that, it's going to be really hard to go back and collect sales tax from the purchasers after the fact.
Right.
So these are just things. These are questions that you should be sitting down with the accountants in your office and just trying to make sure you guys have covered all your bases.
Sounds good, Nick. I think that's going to be an important area to keep track of. And unfortunately, it's, like I said, it's a landmine. It's going to be a landmine for some dealers to keep track of this stuff, especially when you got to track individual volume in certain states.
Yeah, and I guess the big open question out there now too, not to put another piece of fear in your mind, but the Wayfair case is a sales tax case. But there's a lot of questions and out there right now in the legal world that are starting to ask, are other types of or forms of taxes going to start changing basically their Nexus requirements to basically say, hey, you guys don't have to be present here. Maybe you'll be susceptible to gross receipts tax that you weren't before. Are they going to change the franchise net worth taxes around, or could they even change some of the income tax factors around to kind of take into this non-physical presence standards now that this Wayfair case is out there in the ether? So
you're thinking this could open up the doorway for additional taxes being levied on the dealer in the form of?
It's a possibility. It's as the way politics are in today's world. Everybody, all the states, everybody's looking to continue to raise revenue on their end. So it's definitely not something you shouldn't ask the question, or we as advisors shouldn't be at least planning for it in the future. So
I think another key takeaway I mentioned earlier is make sure if you get notices and questionnaires from states asking about this stuff, you just don't, they don't get lost in the shuffle.
Yeah, absolutely. You do not want one of these notices, where they're throwing around $20,000, $30,000 worth of penalties in the trash. You don't want to end up there. Even if you don't have any retail sales there, make sure you send that notice to your CPA or whoever, and make sure that you are addressing that if it is an issue for you.
Next kind of tax that we see a lot of activity on, trying to segue in from the sales use tax, and again, that's the one that had the biggest news, and you probably hear that a lot. The next one is this gross receipts tax. Being based here in Ohio, we have a gross receipts tax called the commercial activity tax, but I know there's other states that have similar kind of taxes. Nick, what are you seeing? Were you seeing issues you seen in that arena?
In the grocery section, and kind of to use Ohio as a good example, since we are located here, we have to be aware that these gross receipts tax, it doesn't matter what your income is. You could lose $2 million if you've got these gross receipts in the state. I mean, you are potentially subject to these taxes. So if you take it, there are some other issues, even particularly within Ohio's. If you come in and how you need to calculate the receipts, basically for dealers, it can be an issue depending on what to include in gross receipts and what not to include in gross receipts in terms of manufacturer rebates and incentives. You got to make sure that you're looking at the way that the state's law is written to make sure that you're including the right numbers. Also, like how you treat the dealer trades can also be a factor in determining, okay, what is actually being added to that gross receipts and what can be excluded.
That's a big issue. I think, one thing we used to do as a dealership advisor group, we used to put out a generic CAT tax template in Ohio. And we've got since modified because these manufacturer rebate incentive programs all vary. And you really need to spend time understanding those and knowing if those things are includable or excludable. And that can have a major impact on your CAT tax return. I agree, Nick. And I think so, like in Ohio, dealer trades, the way a dealer trade's done, I think has a different impact if it's for a deal or just to obtain inventory has a different effect.
Yeah, if you are, and that's a good point, Sam. If you are simply shifting a Ford F-150 from one store to another, simply to meet a customer's needs, you have to facilitate that sale through the books of two different dealers, that would be excludable because you're trying to meet the need there. So, I mean, there's a lot of little intricate details like that, if you're not having those conversations with your CPA, there are definitely things that you need to be starting to dig into and look at.
The other big one we see with Ohio is, especially with the franchise dealers that are on this call, is the interdepartmental sales, reconditioning, things that get recorded up in the revenue that's not.
Correct.
And also for a lot of another thing we watch out for our dealers too is also the other income and expense things that don't get included on the top line revenue sales that often get coded down in other income and expense that are actual includable gross receipts. So there's things like that. These taxes seem to be very tricky. Nick said there's various states have these different kind of gross receipts taxes, and they all have their own little rules. So it's something to be aware of. It's always good to do a refresher once a year on these. Anything else on these gross receipts tax, Nick?
I think that covers that for now.
That kind of leads us to talk a little bit about the franchise net worth tax, Nick. And what do you see in that area? I mean, Ohio used to have, it's been quite a few years now. We had a personal property tax on inventory, but then some other states have similar kinds of things still.
Yeah, I mean, you want to make sure that if you end up, say you're expanding your dealer group or you're opening a new location, maybe you're starting off in a new state, you need to make sure that when you register, you need to figure out a lot of these franchise or network taxes might be out there. California is a good example. I mean, you could just registering your business in California automatically subjects you to $800 minimum tax no matter what, even if you don't do a dime sale in that state during the year. So these are just, they're typically based off of the net worth or the equity of your company as they grow in that state. So these are just things that you need to be aware of and look for. If you're not already established in one of these states, if you're expanding, or maybe you're buying a new store, with all the transactions that are going on out there, these are taxes that you need to be aware of in addition to the other ones. So,
and what about the nexus of these individuals' taxes? The nexus varies on the kind of tax it is typically. Brightline is a Brightline nexus versus the nexus rules in the states. So something to be lead on to the next one would be the state income tax. Again, I mean, some of the biggest issues there are some of the biggest issues there on the nexus side and allocating income to those states.
Yeah, so with your state income tax, currently where we're at is what they call a factor present, and it typically is some combination of the sales in your state, the payroll, wages that you're paying in the state, as well as the property that you have located in that state. So the nexus is the standard is usually some factor of those. Maybe they double weight the sales. So if you own multiple dealers in multiple states, you need to be aware that how you're allocating those and making sure you're tracking, any new capital purchases or fixed assets, and you're making sure you're assigning which state that those assets are located in, making sure you're properly tracking your payroll for obvious reasons, and then in sales as well. And like we alluded to earlier, with the Wayfair case, is it going to be possible that are they going to move to that non-physical presence tax where maybe you've just sold some things in there, but you have no employees there, you have no physical property there, just the sales? Are they going to start moving away to try to pick at you there?
So the biggest issues we see are the dealerships that are near neighboring states.
Mm-hmm.
We got a lot of transactions that are crossing the borders.
Yeah, you need, like, if you got that the Ohio West Virginia border line there, and
based up here in Ohio,
based in Ohio, you got to make sure that that you are tracking that very closely and where that car ends up being titled, so that way you can allocate to the correct state and make sure each one gets paid correctly.
Okay, let's segue into tax incentives, Nick. I know there's a lot of incentives out there for dealers. We see a lot with in Ohio here with dealers that are purchasing. There's some good programs out there. Maybe you could touch on that a little bit for us.
Yeah, so the big thing with a lot of these new tax incentives, Sam, is if you're looking to invest or expand your current dealership, a lot of that money that you're investing into the dealership, for example, Invest Ohio, here in the state of Ohio, credits are available if the money is invested in the business, and you get a tax credit back against your personal income tax on your Ohio tax return.
Tax, I believe, too.
Yeah, and then if you take into account other types of job creation type tax credits, that they're available for when you add as few as 10 jobs in some states, and if you're opening a new dealership, obviously, I mean, there's a lot of manpower that goes into that, and there's definitely some opportunity there to at least kind of look at and see what's available to you.
Yeah, I think if you're in a state that has, especially city income taxes and obviously states, we've been seeing, especially if you're bringing jobs into a new city or moving a dealership into another city, there's often a lot of incentives on payroll tax savings and abatements and things like that. So definitely want to look at incentives if you're going to buy, build, or start into a new state usually.
Mm-hmm. Yep, and another big area too is over here to the next slide is a lot of the new property that you purchase, and then the investment in the building. Depending on where you put this, there's a lot of opportunities out there depending on where you place that new dealership. That could get you some serious benefits on your property taxes. That you can take a quick look at the slide, and these are just a few examples of what's out there. So if you are in that expansion mode, and then you should really take a minute to take a look at where might be areas that you can save some value, save some tax on the real estate side as well.
Good, Nick. I think that's every little bit counts, and I think if you could look at these incentive programs and talk to the economic development, a lot of times states have the economic development and divisions of their state government as a place to start with these. And or if you're in a state where you have city government, city income taxes, it's obviously a good place to start with them as well. So a lot of good programs out there. It isn't often overlooked. You know how many times I've seen folks buy dealerships here in Ohio and had no idea about the Invest Ohio tax credit. So, and it's the stuff you usually have to apply before you do the transaction, not afterwards. So, did want to circle back to other sales use tax issues with Nick. I think there's we're seeing some move other than a Wayfair case we talked at the outset of this webinar. There's some other things that's to be aware of out there. You want to hit those briefly, Nick?
Yeah, so I mean the big one right off the start is what is the correct taxable selling price to calculate the sales on your vehicle sales tax. There's different rules for every state, but again, a common example here is in the state of Indiana, if you have a trade-in allowance, that actually comes off the sales price of the vehicle. So the sales tax that you have to collect is a little bit less. But if you don't know this and you don't put that discount on there, you're, in fact, effectively collecting more sales tax than you should be from the client. That could, in theory, get you in some trouble if the buyer figures that out. So there's a lot of things around that, and other manufacturer rebates and incentives versus, manufacturer and dealer price reductions. You got to make sure you're taking a good look at those. Kind of switching to the use tax side of things, if you are, using these vehicles for yourself, you might also be subject to use tax, especially on things like your demos. Say you buy a car, you put it in your demo, depending on the usage of that vehicle before maybe you stick it back in inventory to sell, you need to be charging yourselves, based on whatever the calculation or formula is that the state that you're located in uses, and make sure that you're charging yourself that tax and paying it in. So that's an area that we can see definitely dealers getting in a little bit of trouble from time to time.
This is in Ohio. This is the cousin of the sales tax. We see, it's been overlooked. It's kind of a gotcha kind of tax, I would say, almost. You have a guy you pay a guy to plow your lot for snow plow. He doesn't charge you sales tax, or doing landscaping and things like that. And the onus is back on you to submit the use tax. So it's a lot. I know a lot of folks don't do that, but it's one of those things that when the state comes knocking, and they could go back 7 years at times for this stuff. So it's something to keep an eye on. Speaking about gotcha kind of taxes, these unclaimed funds are another one. I see, dealerships don't know that requirement's even out there, depending on what state you live in. Maybe Nick can explain what unclaimed funds are, but this is something, if you have them or not, you need to make sure you're filing so you don't show up on the non-compliance list that a lot of these states maintain, and then you get a visit from a friendly auditor.
Yeah, basically what you want to be doing is you want to take a look, kind of scrub your balance sheet accounts, and then look for any uncashed checks or possibly some credits from vendors that show up on there, and make sure. A lot of times what these unclaimed fund tax returns really are is just basically listing out what they are and filing it with the state, so they have that on their record. And the key here is that if you do have these unclaimed fund tax returns and you're not filing them, you're not starting that statute of limitations. So in theory, if you're just kind of not paying attention to this at all, you could get hit with a pretty big, penalty for not filing the tax returns, and it could be for several years. Because a lot of times what you see is, maybe the dealer is just not aware that they need to be doing this, and it's something that you need to be reviewing to make sure that you're not creating an undue liability for yourself that you maybe not be aware of.
Many states have a business-to-business exemption. That's one thing I want to highlight. So really, a lot of times, like in Ohio, for instance, does have a business-to-business exemption. So we're looking at checks not cashed by individuals. In theory, these checks usually typically when these are identified, they need to be turned over to the state for the state to find their rightful owner to collect it. So that's something to be aware of. Make sure these things are getting filed. In Ohio, I believe it's November 1st they're due.
Yes, correct.
And but in the individual states, you need to be aware of this. And again, this is another one that's got you kind of taxes to sneak up on you. From here, I think we'd like to wrap up with Nick. I think, wrap up on this, on any other thoughts you have, Nick, on this?
Yeah, I just wanted to circle back for everything that we talked about today, just back to that Wayfair case again, and really stress, if there's anything that you take away from today, that change in getting away from the physical nexus. This is big. Every state right now across the country is looking at this as a way to generate new revenue. And, you really got to sit down with your internal people and then figure this out. If you do have online sales to out-of-state customers, it can be as simple as putting together spreadsheets. Just us accountants love spreadsheets. So, call them with states, call them with your sales, line them up, and then figure out maybe one more column for end users, and just say, okay, well, here it is. I've got sales in 15 states. Go out, and then you can, get with us, and we're here to help if you have, questions on maybe what those thresholds are per state and what makes those up. So I think that's all my main takeaway from today is.
Yeah, we thought this, I'd like to thank everyone for attending today. I think this is, we thought this was a great topic. I think as these states and local governments are scrounging for dollars to operate, enforcing these tax enforcement of these taxes, or we see more and more activity in this area. So something to be aware of and not lose sight of this stuff. But again, I'd like to thank everyone for coming today. Hope you join us next month. We're going to focus on driving value and valuations of a dealership. The question we often get is, what's my dealership worth? So we're going to have Mike Stover of our of Brady Ware speak about some of the factors that drive the value, to create value in your dealership, and how value is usually determined. So be sure to join us for that. And also to note, our save the dates should be coming out for the annual Brady Ware Dealership Conference, which is September 19th. We're going to have Cliff Banks join us as a keynote speaker, along with Kevin Timmerson from Blavia Black and Crossit on discuss their scene in the dealership area. So look forward to seeing you next month. Thank you.